Good afternoon. This is Donna with Inspiration and Networking, and today is Wednesday, January 15th. And I just wanted to come on today. This is another video in our series of, this is actually video 5 in our series of home loan financing. And today we're going to talk about tax returns for people who are self-employed, people who receive mostly commission income, or they receive a good portion of their income as commission, and rental income or dividends. So when you apply for a home mortgage, no, you don't have to be concerned that because you have that you're self-employed or receive rental income, etc., that you can't get a loan for a home loan. As a matter of fact, there are many programs out there for just those type of loans, and they have different requirements, and some of them don't even require tax returns. But for the purpose of talking about just standard conventional home mortgage loans, we're going to talk about tax returns today because they will want to see them. Now, here's the thing. If you're self-employed, or you receive any kind of dividend, rental, or commission income, and you report it, of course, on your tax returns, then you're going to have to provide the most recent 2 years of tax returns. And the rule of thumb is that income will be averaged, the net income. The thing about qualifying with income on your tax return is that it is basically considered net income versus on a regular W-2 and a wage earner type income. It's based on gross monthly income. But with the tax returns, self-employment, etc., they're going to look at the net income. And so they're going to average that over 24 months. Now, there are some cases where they will use the most recent 12 months of self-employment income if it is higher than the prior year. And that if it is higher than the prior year due to, say, for example, like, I don't know, in 2020 and 2021, we had this thing called a pandemic. And so there was, some people had, who were able to stay self-employed. They had a downturn in business, depending on what it was. And so 2022, if their income was, substantially better in 2022, then they would, underwriting would consider and average the 2022 income versus a 2-year average of 21 and 22. They do like to see people self-employed for a minimum of 2 years so they can have a full 2-year tax return record. They're also going to ask for your year-to-date profit and loss statement and balance sheet. So they'll want to see kind of how the business is doing. They're not going to incorporate any of that income that's earned during that profit and loss period, but they're going to just kind of look to see how the business is doing year-to-date, to see if it's on track for earning at least as much as it did the prior year. And hopefully it's more. But anyway, those are the kinds of things that they're going to look for and they're going to look at. They're going to, as I said, if you're a Schedule C, you're going to have a regular 1040, and you're going to have Schedule C, which is for a sole proprietor. So if you, like me, doing YouTube videos, if I receive ad income from YouTube, then Google AdSense, then I will have to file because I'll receive a 1099. And so with my 1040 tax return, I'll have to file a Schedule C, where I will list my gross earnings and then any expenses that are incurred. Like, for example, my cost for my internet service is one thing that I can deduct from that. And any depreciation off of anything, and because I basically am, quote, running a business out of my home, I can, do some deductions there. You'll want to check with your tax professional, of course, on things that you can deduct, obviously, but just to give you an idea that's what I would file. Now, if I were to incorporate, then it would be a different story. Then I would have other types of tax returns that I would have to file. And so I would have, those tax returns that I would also include with my mortgage loan application for the last 2 years. And so, so your loan officer, again, will ask for the appropriate information. If the loan officer doesn't, the processor likely will. And so they will be, again, averaging the income from those tax returns. And everything has to flow. Everything has to match up. So I had one gentleman who I worked with on his loan, and he was incorporated, so he provided his corporation tax returns, but then it showed that he received and his personal tax returns, and it showed on his personal tax return as well as the corporate tax return that he paid himself a salary, and that he had W-2 income. And so, of course, I had to have the W-2s. And he's like, I don't know what you're talking about. I'm self-employed. Yes, you are. But you pay yourself. So he had to reach out to his accountant to get a copy of his W-2 for those 2 years of his tax returns, both personal and business. There's no W-2 for the business, but he had to have all that documentation so it all flowed together. Then we were able to average his income. And I think we just qualified him basically off of his W-2 income because his business growth was strong enough with that profit and loss statement year to date and his balance sheet that we were able to use just his W-2 income, which was significant enough to be able to qualify for his home loan. Same thing with commission income. So basically, he was a real estate salesperson. And so his income that he earned, that he put into his business, was from his real estate commissions. But he didn't take all of that income in commission income. As I said, he paid himself a salary of a certain amount per year and issued a W-2 for that. But some people work just straight commission, and they're paid sometimes on a W-2 or a 1099. Again, they're going to file, their tax return, their 1040 likely, and they will report that commission income accordingly. So if it's reported on W-2, that it's W-2, and they may or may not be able to have any of the write-offs that you would have if you were paid on a 1099. So again, check with your tax return specialist regarding that. So because tax laws change every year, and I'm not a tax attorney, and I'm certainly not a tax preparer. So, but these are just some things that I've seen. So again, this is basically for informational purposes only of what to expect when you are receiving this kind of income and you're applying for a home loan. So these are just the why behind the reasons that you would be asked for those forms and that documentation. If you have rental properties, again, you're going to be asked for your 2 years, most recent 2 years of tax returns, which will reflect the address or addresses of any rental properties that you might have. And they're also probably going to want to look at the leases for those properties and the mortgage statements and insurance information, insurance and tax information. So they'll want a copy of the declarations page for the insurance and a copy of the tax statement. Most of the time, the processor can get the tax statement. I've pulled them from all over the United States for properties on loans that I've processed that were even in other states where people have owned properties and received rental income. So that information is generally public regarding the property taxes. As far as the leases or the mortgage statement, no, the borrower is going to need to provide that along with the declarations page from their insurance agent or agents, depending on where their properties are located, to show the current insurance premium on the home, on the rental property. And so all of that information will be taken into account and calculated with the gross rental income, that is reported on the taxes, and then they will derive a net rental income or sometimes a rental loss. And if it is a rental loss, just the same as if it is a business loss, it's counted against your overall income and determines your debt to income ratio for your loan. And lastly, I want to talk about dividend income. Dividend income is basically earning dividends off of stocks and bonds and that sort of thing. And they're reported on your tax return. Again, they're going to average those over 24 months. So those are just some general informational comments on those type of forms. Again, if you have any questions about that at all, certainly you can leave comments, and I'll try to answer the question as best I can. But if it's specific to a situation that you're involved in, maybe if you're in the process of doing a home loan with someone, you're going to want to contact your loan officer and or your loan processor, who will be able to explain your situation to you, or comment your questions, answer them directly, and help you with that. Again, I am retired, and I'm just sharing information that hopefully will help you to understand the why behind why you need to have those documents. And so anyway, thank you so much. Please leave a comment, share, like, subscribe, and I appreciate you taking the time to watch this video today. Have a great day. Bye.